All right, Oliver, we've had a couple of days to digest that report. Yesterday was more digestion, maybe indigestion. What are your thoughts here?
Well, I think that's a pretty good way to put it. And you had mentioned it's nice to see some green on the screen, and it is, but we've got a lot of technical damage to repair on these charts. And potentially we are starting to carve out a harvest low, but we always say tops and bottoms are a process, not necessarily a point. Today, with a little bit of green on the screen, could be the beginning of that process. We tested and held some pretty significant support pockets for corn and beans. 497 to 507. That's a wider support pocket than we typically like for December corn, but there's a lot of significant price points within that pocket. We've tested and held that 3 times. Yesterday, tested and held that, made it 4 times going back to May. So as long as we can continue to defend that, I think there's a good risk-reward trade here to the upside. We need to see a conviction close back above 520 to really get the ball rolling in the right direction. A break and close below that pocket that we talked about, the psychologically significant $5 area, probably starts to trigger some additional long liquidation. So those are the levels to look at for corn. As far as soybeans, everyone saw it on the chart, 1180, 1185. You don't need to be a technician to see why this level is significant. If you look back to the end of March, quarterly stocks report, you can see this is where we finished on the low end and really springboarded higher, which started that rally towards 1480 for the November contract. So we tested and held that. Today's good, but need to see some conviction closes, consecutive closes back above the psychologically significant $12 area to get some shorts covering their positions.